The euro stays soft as last week's correction continues and is weighed down mildly by the political situation in Italy. With just 2 weeks to go until the election on February 25, former Prime Minister Berlusconi continued to close the gap with front-runner Bersani. And the situation now raises concern that even though Bersani could win a majority in the Chamber of Deputies, he might fall short of majority in the Senate and would need to ally with Monti. Meanwhile, Berlusconi is still being viewed as a wild card for the election, and it's been described by a Financial Times article that a new term for Berlusconi would be a disaster for Italy. The article warned that Berlusconi is regarded as an unreliable partner by European fellows and Italy would risk being marginalized. Eurozone leaders will meet in Brussels later today to discuss further financial aid to Cyprus and Greece. Swiss National Bank's board member Febraury said in an interview that the franc is still overvalued, even at current exchange rates. He noted that the expansion of the balance sheet was a result of policy as the Swiss National Bank intervened heavily to defend the Euro Swissy 1.2 floor, in particular in Q2 and Q3 of 2012. But that was inevitable to combat the massive overvaluation of the Swiss franc. He also emphasized that there are still risks in the euro, and dangers of major exchange rate movements. And thus a minimum exchange rate remains the appropriate instrument for the foreseeable future to ensure price stability. The Australian dollar remains steady as home loan approvals dropped for the third month, by 1.5% in December, much worse than expectation of a 0.1% rise. Also, November's figure was revised down to a 0.7% drop. Economists noted that the Reserve Bank of Australia would be looking for signs of improvement in the housing markets. Last week, the Reserve Bank said that growth in 2013 would be below trend, and at around 2.5%. CPI would rise 3% in the year to June 2013. The unemployment rate is expected to edge higher, and the inflation outlook leaves room for further easing when necessary. Latest CFTC data shows that speculation continued to accumulate euro long position in the week of February 5. Meanwhile, there was also a shortening of long positions in both the sterling and Canadian dollar. Indeed, net sterling positions were approaching neutral and could turn net shorts in the next few weeks. Euro net longs rose for another week to 38,000 contracts, up from the last week's 27,500. That's the fourth consecutive week of improvement in net positions, and note again that euro was in net shorts for almost the entire 2012. Sterling net longs dropped for another week to 1,200, compared to the last week's 10,600, and was sharply lower than December's high of 37,300. Yen net shorts dropped slightly to 68,400, down from 71,200. Canadian dollar longs also dropped again to 27,760, down from